What's up everybody? Welcome to the Stocks channel. My name is Cory and today was the last trading day of 2022 and we can now officially say that 2022 is closing in a bear market, which means we will be heading into the next year still in a bear market, so it's going to be important to have realistic expectations for the next trading year. So first up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today SPY was down 0.26% as we put in the last trading day for the year, and I think it's very safe to say this was a very difficult year. And if you survive this year, and even if you had a losing year, if you made it out alive, you are much better off for it. And I do think we are going to see a very similar trading year next year, but only time will tell, and we never know for sure exactly what's going to be in the cards. But there is very good reason to believe this bear market is not yet over, and we will continue into it next year. So if you're in the Stocks channel Discord, look for those members only videos that will be coming out, because I'm going to go over my thoughts for the next trading year, and I'm going to give you a very solid trade plan of exactly what you need to be looking for. Now when it comes to the daily chart analysis, we can see SPY did not break down below that very critical support at 378, and that is very important to pay attention to because that is the critical support that the bulls need to hold, otherwise the bears are going down for that next leg lower. So the bulls are doing everything they need to do to defend that support, which does mean we can see a short-term counter trend rally into the first couple of weeks of January. And right now it does not look like we may get all the way up to 396, but it's looking a lot more likely that we can at least get up to about 389 to 390. So in the very short term, and I'm only talking about the next few trading days, it does appear that we could continue into this counter trend rally up to some of this critical resistance above. So for that reason, I continue to tell you not to get overly bearish near this support, because you always want to respect support levels until price action confirms that they're breaking down, and we have not yet lost that support zone. The other thing I want you to pay attention to is that today we did go up on increasing volume, and we did get the second day in a row closing back over the 5 EMA. So traders are going to view that as some type of reversal from the short-term downtrend, and it does look like we're starting to see some strength in the short term. That short-term strength will likely carry over into next week as we rally to close the gap around 388, and then above that we could go test the critical resistance zones between 390, 393, and the gap fill at 396. It is likely at that point we will see a visit from the big bad bear, and we will likely start back down towards the next bear market leg lower, because there is no reason to believe this bear market is over, so our expectation is still lower highs and lower lows. The only way we are going to stop expecting lower highs and lower lows is if we can break out of the bear market resistance trend line, which is going to require SPY to start closing back above 408, and that is a long ways away, so we're not even going to speculate about the possibility of a bull market. We're going to let the price action do all the talking, and right now the price action is telling us this is more than likely just going to be a counter trend rally in a bear market. So if you don't think this bounce is coming and you know the longer term expectation is still lower prices, then you can still stay short on this market. But I always suggest to my viewers and our traders that you should never get bearish at support. Always give the bulls benefit of the doubt at critical support levels until they can prove they are not there. Let that support level break down, and then you can start shorting for that next leg lower. If you've been shorting anywhere around SPY 378, you're losing your shirt because that level continues to act as support, so it's much safer and much easier and just a much better trade plan to wait for that level to break down. In the event we start getting this rally, we will eventually see a high volume rejection. We'll see a reversal of the short-term counter trend, and then at that point you can enter a much better risk reward short trade, getting ready for that next bear market leg lower. So watch that very critical support at 378, and as long as that level is holding up as support, you will want to give the bulls the benefit of the doubt. On the Nasdaq 100 triple Qs, we were flat on the day, only going down 0.06%, but we did get the second day in a row closing back over the 5 EMA on the daily chart. You could see the triple Qs had a horrible year, closing down over 32% year to date, and we can see that we did close near the 52-week lows, so we did not see any counter trend rally yet. However, I do think there's a good chance we get that counter trend rally early next year, and that counter trend rally would likely take us up to about 274 all the way up to about 280 to 283. It would be at that point that I expect to see the big bad bear showing up, getting ready to drive us for that next leg lower, with that next leg lower likely being somewhere around 255 to 250. So continue to expect a counter trend rally as long as this support at 260 is holding up. And if we lose the support at 260, then you're instantly getting ready for that next bear market leg lower, because that's the critical support that is likely going to send us down for the next leg lower. You can see we clearly have a strong bear trend, and we are still clearly in a bear market, being down over 30%. So we continue to expect lower highs and lower lows while we're in the downtrend. On the Dow Jones, we were down 0.22%, and the Dow Jones is still holding this very critical support at the 50 EMA at 330. Below 330, we'll be looking for support at 327 and 325, and the resistance levels we need to break is around 334, and that should easily take us up to close the gap around 337, and likely hit a price target right around 341. So we're getting a lot more bullish on a break above 334, and we're getting a lot more bearish on a breakdown below 327. On the Russell 2000 IWM ETF, we were down 0.28%, and again, the small caps got the second day in a row closing back over the 5 EMA and still holding this critical support zone around 172. Below 172, we'll be looking for 52-week low retest down here in the 160s, and the next price target to the downside right around 159. However, that is only once we get a confirmed breakdown below the support at 172. Critical resistance is 176, 178, and the gap fill just below 179. And we're not getting bullish until we start closing above the bear market resistance trend line around 182. On the ARKK ETF, we were up 0.22% today, and ARKK is still in a very powerful bear market, but I do think we are getting very close to what could be a bottom in this ETF, but we won't know until we get a counter trend rally and break the resistance. I need to see the bulls getting all the way back above 38 to say that we've likely seen a bottom. So in the short term, you are still expecting lower highs and lower lows, with resistance right around 31.3, 32.5, and 34.6. The downside support to pay attention to is right around 29.7, and the next target lower at 28.37. On the VIX, we were up 1.07% as the VIX is still floating between this zone at 20 to about 22. But the good news for the bulls is that the VIX is not spiking above 24, which tells us we are likely not getting enough volatility to send us yet for that next leg lower in a bear market. The bulls will be getting a lot more confident if the VIX starts crushing down below 20, but the bears are still in full control in this volatile market while the VIX is elevated above 20. So just because the VIX is not above 24 does not mean we are not still in a bear market. So continue to expect a very volatile market. On Bitcoin, we're currently down about 0.25%, and Bitcoin is still trading around this critical support right around 16,000. And if we break that critical support, the next leg lower will be 14,395. Some critical upside resistance to pay attention to is at 17,000 and 17,550. And we won't see that next leg higher unless we can clear all of that resistance. And then we should see the next leg higher up to 19,000. On Amazon stock, we were down 0.21%, and Amazon is still below the critical risk level at 86, which means it's still a risk off market in Amazon until we can get back over 86 and then back over 91. While we're below 86, watch for support around 82, 80, and the next target lower will be around 77. We're still in a downtrend and Amazon is below 86, so continue to expect lower prices until we can break that resistance. On Microsoft stock, we were down 0.49%, and Microsoft is still below the critical risk level at 242, which increases the likelihood it's trying to fill the gap down here at 228. We can get more bullish if we can break above 242 to about 245, and then we'll need to break the extremely critical resistance up here at 252. It's not until we can get above 252 that we can start looking for the gap fill at 265. So this is still going to be a lower highs, lower lows market while we're below this critical resistance. On Nvidia stock, we were up 0.08% today, and Nvidia is getting that dead cat bounce from being extremely oversold outside the lower Bollinger Band, but it's more than likely just a dead cat bounce while we're below 156. Below 156 means we could be heading back down towards 133, and above 156 we will be looking for that bull breakout back above 167 for that gap fill at 174. But again, we're not going to be getting bullish until we can clear that resistance at 156, even though on the way to 156 you could take a long trade with your risk level down here right around 142. On Tesla stock, we were up 1.12% today, and if you have not already seen, I did a very special update on Tesla stock. So if you haven't seen that video, you may want to go watch that video now, because I went into very detailed analysis, which included looking at the weekly and monthly charts. So if you watched that video, you probably already know everything you need to know about Tesla, but in the short term, we're looking for the gap fill to the downside right around 116, as long as we get rejected from this resistance zone around 130. If we blast right through 130, we're likely not going to fill that gap at this point in time, because that means we're either heading to 138 or 155. So if you look at the volume on Tesla, there is extremely high volume the last 3 days, which is all on green days that are going higher. So it does appear that the capitulation selling is over, and now we're seeing very high volume buying, which tells us there's some big money entering into this stock at these prices. Never ignore high volume buying, just like you should never ignore high volume selling, because this is exactly how stocks put in bottoms. Somebody really wants in the stock at these prices, and it's impossible to hide it with the volume, and it's now 3 days in a row, and we're back over the 5 EMA for the second day in a row. So even if we do fill the gap to the downside at 116, that could still be a higher low on our path up towards 155. So I am looking to get a lot more bullish on Tesla stock while we're down here in the low 100s, because I do think this is going to be a very important bottom in this stock. That's okay if you disagree, and yes, it is still in a downtrend, so it's contrarian to be bullish on this stock, but that's why you always manage your risk accordingly, and only you can say how much risk you're willing to take and whether or not this stock is for you. If we do break down below 116, look for the next support right around 107, and if we break 107, the next bear market leg lower will be 94. On Apple stock, we were up 0.25% today, and Apple came all the way back up to that critical resistance at 130, which is the bear breakdown below that critical support. So if that level now acts as resistance, that is going to be extremely bearish, which means we'll likely get rejected and come all the way back down to 126 and then 122. Above 130, you can get a lot more bullish and use it as your risk level, because above 130, we could be heading back up to 135 and then 141. Above 141, we're likely breaking out of the bear market, but we're not going to know that for quite some time, so you need to continue to manage your risks down here right around 130. On the financials, we were down 0.26%, and the financials are getting very close to closing that gap, which is right there at 34.49, and I do think that gap is going to be closed in very early January. The industrials were down 0.4% today and still have a gap to fill up there just above 100, and I also believe these gaps will be filled very soon. The healthcare sector was down 0.36% today, and we did fill the gap up there at 137 with yesterday's price action, so you can only stay bullish now while we're above 134. The energy sector was up 0.63% today, looking bullish with the price action back above all of the moving averages and slowly but surely rebuilding that bull trend. So jumping back over to the SP 500, the year 2022 is finally over, and it was a very treacherous year for the markets. And if you survived trading this year, hopefully you learned a lot about risk management and carry all of those lessons over into the next year, and make sure you're trading with discipline, a great risk management strategy, and following the price action so that you don't have any bias about where the markets are going. It does look like we are going to continue into this bear market next year, but we will instantly change our minds if we see the price action breaking through the critical bear market resistance. Remember, we're going to let the price action do all of the talking, and whether we have a bear market or a bull market, we should still have plenty of trades and plenty of opportunities. So I hope you all learned a ton from the market this year. And even if you had a bad year, stay optimistic, because trading is very difficult, and the more you learn, the better you're going to get, but it's always going to come back to being disciplined and having great risk management. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank Trade Alerts or learn how to subscribe by clicking on the link in the description of this video. If you want to become a better price action trader, come join us at the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Trading Discord community by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.